At the end of the day, what gives any asset value, I would say at the very fundamental level, is trust. People's trust in the asset that it's worth something, that it has some use.
Mm-hmm. All right, everybody, welcome back to another great episode of the Richer Geek Podcast. We have Shahar Abrams, and we are going to talk with Shahar about crypto. And I think everyone has questions. Everyone, is wondering what the heck is crypto assets. We've all heard about it, but what exactly is it? So, welcome, Shahar. How are you doing?
I'm doing great, Mike. Thanks.
Um, your background is you've done some type of traditional enterprise type blockchain stuff. So give us a little bit about who you are, what your background is, before we dive into it.
Sure. So my background is in, I didn't know what I wanted to do growing up. I studied finance in college, but I kind of quickly realized a life in, banking or in the traditional financial system wasn't for me. So after I graduated, I think I did the biggest, cop out thing that people do, which is you go into consulting because you don't know what the heck you want to do. So in consulting, I joined IBM, working, in their federal government practice, as a consultant. And I did a lot of analytical work, data science type of stuff. That's kind of the track I was on. And then in mid 2017, I discovered, the tech, the blockchain, and what this actually was. I had heard about Bitcoin before. It was kind of a fanciful, thing for me. I didn't really take the time to understand it. And in 2017, that changed. I, read a very good book that kind of explained the tech, and immediately I was hooked. For me, it kind of presented a solution to a few problems I was really worried about. Am still worried about, but now at least I can be optimistic about them, which is, I think, some of the biggest problems we face today, trust on the internet, right? And security, right? And kind of individual sovereignty on the internet, which is really something we can't be so comfortable with right now. And crypto as tech, as a ecosystem, and as even kind of a philosophical movement, is trying to answer those questions in a way that I think emphasizes individuality and personal privacy, personal control, some things that I really care about. So I started working and I started investing in the space in 2017. As luck would have it, it was pretty good timing for me. It was like the middle of 2017. So I quickly made a lot of money, which I wasn't expecting. And it definitely exposed the fact that I had no idea what I was doing as an investor. And so, I didn't sell anything. After, making 400% in a few months, right? I just hodled, right? I thought that's what you were supposed to do. And I watched over the next 2 years, 18 and 19, I watched all of my paper gains disappear and then some. But I was totally hooked. I kept doing research on it. I also dedicated myself to, not making that mistake again, getting better at understanding investments and strategies and stuff like that. I started working at IBM in our blockchain practice by the end of 2018. And I was going to lots of conferences, learning a lot more about the space, learning a lot more about investments. By the end of 2019, I was pretty much almost all in to crypto. My conviction was just so high, and I knew, I could take that risk being a young guy with, no dependents and that kind of thing. Fast forward a couple of years, that bet really paid off for me. And now I get to focus on doing what I'm really passionate about, which is helping spread the ideology of this technology and its promise and its benefit to as many people as I can. So that's kind of my MO for focusing now on education
Now,
in space.
For an old guy like me that, I'm thinking I don't even know what blockchain is. I keep everyone these little buzzwords and
Yeah.
Elon Musk is talking about it's, here's what I don't understand. It's a technology, but people are buying and selling it and paying things for it. I mean, what is this thing? It's because some people are saying, well, it doesn't really exist.
Right. Yeah, that's a great place to start. So let's
Yeah.
start there. So blockchains have actually been around for a while. The idea of a blockchain is a cryptographically linked, chain of data where every piece of data we put, it's a database. Okay. It's just a fancy kind of database. But every piece of data we put in this database, we cryptographically link it to the data before. And so if anything in the data changes, it breaks the cryptographic link. It's very obvious, right? So for this reason, blockchains are said to be very secure, very tamper evident. They are fully tamper evident and thus somewhat tamper resistant, right? Because you have this immutable record of the data, right? Now, that idea was around for a while. The innovation that happened in 2008 with the Bitcoin white paper was this idea of distributed consensus. So how do we actually take this type of database, a blockchain, and make it decentralized so that we can actually fully trust the data because, there's nobody with, God mode over the database that can in fact go in and perhaps change the hashes. And more importantly, right, if this is a system that's going to be used for value transfer, which again, not a new idea. Ever since the internet, was created, there were people working on this problem. Well, how do we send value natively on the internet? That would be great. The problem was every time you tried to do it, it was centralized, and so it would get shut down or it would get corrupted. But with this innovation of distributed consensus, combined with this very high fidelity way of storing data in a blockchain, you actually can achieve this. And that's what Bitcoin and now many other crypto assets have proven. And so what is actually, it is that has the value, right, is just, numbers on a screen, right, a data entry in a database, not really so different from how your money is in the bank now, right? There's no actual money there. It's just numbers on a screen that they show you. And it's numbers that correspond to their entry in their ledger, in their database about what you have, a function of all your credits and debits. Now, all we've done is take that ledger that your bank needs to maintain. And every time you make a transaction, they got to talk to the other banks with their ledgers and you make sure they change it on each side. That's why it takes so long and it's so costly. We've taken that process and we've made it into an open distributed process where we can all now see the data on that ledger, what my balance is, what my transaction history is, and therefore, what I currently have, right? And so once again, so it's numbers on the screen. The difference is that this is it's cryptographically recorded and unique. So, you probably heard there are only ever 21 million Bitcoins, right? Every Bitcoin is an entry on this ledger to just say, here's one Bitcoin, it's in this account. And, when you send it to another account, however much you might send, it moves over there. And so it's all just a ledger. Whatever the ledger says is the truth, right? It's a single source of truth. Does that make sense?
What exactly? So you're not really buying something that has, where's the worth in like Bitcoin? So I go to you and say, okay, I want to buy 10 Bitcoin or Dogecoin or these whatever it is. Why is there value in just this journal entry file, this number? What makes it have value?
Yeah. At the end of the day, what gives any asset value, I would say at the very fundamental level, is trust. People's trust in the asset that it's worth something, that it has some use, right? The US dollar, right, doesn't have intrinsic value, obviously, right? But we all trust that we can use our dollars to pay taxes or to buy goods and services. And so this gives it value. Gold doesn't really have intrinsic value to us unless you're a very skilled jeweler. And even then, that's probably not worth the whole price of what gold is, right? But we trust that it has value because it's very difficult to counterfeit and it's very scarce, right? We know there's only a certain amount of gold. So those things drive the value for these types of assets. And with Bitcoin or other crypto assets, it's no different. I would say what gives Bitcoin value is the fact that you can trust it. And in fact, it's more scarce than gold, right? Because we don't know how much gold there is in the ground, but we all know how much Bitcoin there is at a given point in time, and how much Bitcoin there will ever be, right? And we can never make more. And it's actually more difficult to counterfeit, right? It's actually never been successfully counterfeited. And if someone were able to counterfeit a Bitcoin, that would kind of, it would no longer have value, right? Because that's part of the point. You cannot counterfeit it. You can't counterfeit some entry on this ledger, right? On your own, right? And it's incredibly scarce, and it's decentralized, right? So, part of what gives something like the U.S. dollar or another fiat currency trust value is the fact that we really trust the central institution that's behind it. Okay, and with good reason, a lot of the time. So the United States, backed by the full faith and credit of the United States government, that sounds pretty good. But if you substitute that with, backed by the full faith and credit of the government of Zimbabwe, that doesn't sound as good, right? But on the other hand, what we say, in Bitcoin and crypto is backed by the full faith and credit of math, right? And that's really what we're trusting in at the end of the day, why we're trusting in the distributed system. We're trusting in computers all around the world that can be run by anyone to maintain this ledger and protect the security of the network, i.e. the fact that it can't be counterfeited and that you can use it, right? You can send it to anyone that you want, right? Whether you want to pay for goods and service or do a remittance, right? Or just you want to send money around, right? You have the ability to do that permissionlessly. What we say permissionless, you don't need permission from anyone, right? And it cannot be censored or stopped, right? So Bitcoin literally is the single most secure record of data that we have ever created in humanity. It's the most immutable, secure way of storing data possible, right? Because of its decentralized nature and the amount of computing power, right, that's behind the network as a whole.
So who controls this ledger? I mean, where does it sit?
So the ledger is distributed, right? So you can go on a Bitcoin Block Explorer. If you Google Bitcoin Block Explorer or Bitcoin blockchain, you can see an entire record of the ledger, right? You can see every transaction that's ever been made. You can go do that today, right? Anyone can, and if you wanted to, right, you could download the source code and actually download the entire ledger. You can sync with the network and get that ledger from another node, right? And you can see everything. Now, it's an important question, right? So you might ask, well, who gets to maintain this ledger, right? Which is kind of what you're asking, right? It's very important that the ledger is trustworthy and secure. Otherwise, none of this has value. And so the answer is anyone can do it. Anyone can download code, which is open source, and then get some hardware and become what's called a miner, right? And what it means to be a miner means that you are participating in validating transactions on the network. So when I use Bitcoin and I, try to send it to someone, I'm broadcasting this transaction over the internet to the entire network. Now, the network of miners, which are running code to listen for these transactions, see my transaction, pick it up, right? And then package it into a block, right? A set of transactions that then gets appended to the ledger cryptographically, right? Now, in order to do this, right, the node, before they add transactions to the ledger, they effectively have to prove to the network, to all of us, that they are trustworthy, that they are acting in the best interests of the network, right? Now, only one miner at a time gets to add transactions to the ledger. And so in order to do that, they have to win what's called, the proof of work, right? Which you may have heard before is, Bitcoin proof of work, Ethereum proof of work. These are the consensus mechanisms that these networks use, right, to, decide who can add more transactions and maintain decentralization. So in order to do that, for what happens in proof of work, which is what Bitcoin uses, right, and Ethereum currently uses, is the way that we prove that we're trustworthy to the network is by expending a lot of computing power. And the idea being that if you expend enough computing power doing this certain calculation that's only really useful on the Bitcoin network, that means that you have invested a lot in the hardware to be able to do those calculations. And thus you have real skin in the game, right? You have a real stake in this network. So that's where kind of game theory, comes into play.
So that's where, like I've read in the newspapers and online that there are firms that are buying like these industrial buildings,
right,
just to mine.
Right. So nowadays it's very competitive to be a miner on a network like Bitcoin or Ethereum. Used to be back in 2012, 2013, you could pull up your laptop and your laptop would have enough hardware to mine a little bit, right? Mine competitively. Nowadays, you need to be investing tens of millions, if not hundreds of millions of dollars in hardware and infrastructure if you really want a shot in mining on the network. Now, if you are a small miner, you still want to mine on your laptop, you can do that. But what you'll do is you'll join a pool of a bunch of other people. And some of the largest miners are, in fact, mining pools that are made up of many different miners spread around the world. But there is a large capital investment, right? You have to make if you want to be a really big miner, and you have to think about, all right, what are my capital costs and the hardware I'm going to have to buy? How long is that going to be useful for, et cetera? And then what are your only other input is your OpEx, your energy costs, right? What am I going to pay for energy? Because that's all I need to mine. I need energy and I need the hardware. And then I can be anywhere, right? As long as I have an internet connection and I can contribute to mining on the network. And just to give you an idea of, how much this is happening, right? And mining on Bitcoin and proof of work is the process of, basically brute forcing a math problem, right? So doing lots of operations again and again on a specific algorithm called SHA-256. And right now there are around, I think the number is, a few quintillion of these operations happening per second on the Bitcoin network per second. So quintillions of hashes per second every second of every day, right, on the Bitcoin network. That's what is behind Bitcoin, right? When people have what gives it value, well, that's the security mechanism of it at play.
So how are these crypto firms that are mining, how are they making money? If they're just mining and keeping this database, what's in it for them? What are they doing?
Yeah. So yeah, great question. What incentivizes miners to contribute their computing power to help secure the network, like we talked about? And the answer is the miners actually get rewarded. So when a miner finds a block on Bitcoin or Ethereum, many crypto networks, in fact, work the same way. When you mine a block, that block includes a reward for the miner, which is a new transaction, which is called a Coinbase transaction. You want to get technical. Which says, pay me X amount of Bitcoin. It's a new transaction the miner gets to add to the block just once when they find the block. That's known as the block reward. The block reward for Bitcoin started at 50 Bitcoins per block. So it used to be, and there's a block around once every 10 minutes in Bitcoin. So it used to be in 2009, 2010, every time you would find a block, you would get 50 Bitcoin as the reward. Now, back then, Bitcoin wasn't worth much. And what happens is that every around 4 years, the reward is cut in half. So in 2012, the reward was cut from 50 Bitcoin per block for any miner that finds a block to 25. Then 4 years later in 2016, it was cut in half again from 25 to 12 and a half. And then in May of 2020, last year, it experienced the third halving. It's called the halving. Where now the Bitcoin block reward is 6.25 Bitcoin. So now if you mine a block on Bitcoin, which by the way is much harder than it was before, ever has been, your block reward will be 6.25 Bitcoin if you're able to successfully find the block. And that simultaneously is the supply inflation of the network. So you ask, where does new Bitcoin come from? That's where it comes from.
But there's only so much that can.
Correct. Because every 4 years, it keeps getting cut in half.
Yeah.
To where eventually the last fraction of a Bitcoin will be mined approximately in the year 2140. Right?
Why don't they make it easier? So a block is, I'm buying something from you and I'm paying via crypto. That creates a block.
Yeah.
Okay. So I don't like to work that much as far as like the thinking part. Why it seems to me, why don't they have cryptoblock.com and this is where people do their blocks?
So it's important. Yeah, let me try and answer that. It's important, when you make a transaction to send someone Bitcoin or whatever other crypto, right? That you broadcast it, it gets packaged with other transactions in a block, right? What becomes in the next block that's
okay.
added.
So there is somewhere that I'm doing this. I'm not just going to Venmo and sending you crypto and no one else knows about it.
Right. So you'll have a separate application, like a front end application called a wallet.
Okay.
Right. And you can wallet applications are not part of the blockchain, right? Anyone can build kind of a front end, right? That just sends transactions to the Bitcoin network. And that's effectively called a wallet. And nowadays there are really good interfaces, right, for wallets that make it super easy, where you can just put in what you want to send, you'll put in the address you want to send to, you hit send, and the wallet does the rest, right? Some of these wallets, in fact, when you hold your crypto in these wallets, they in fact will pay you interest. They'll pay you passive income on your crypto, much like a bank would, for your deposits, except like, 10 to 50 times more interest, right? So for instance, all of my Bitcoin that I hold in my wallet, I earn upwards of 3% per year on. All of my Ethereum that I hold in my wallet, I earn upwards of 5% per year on. And all of, there are another type of crypto coin called stable coins, which are just digital crypto representations of something like a US dollar. So we just take a US dollar and we make a crypto on it so we can send it on this distributed ledger on crypto rails, right? Those stable coins, which you can get for free, right? Just convert 1-to-1 with US dollars and they're all regulated. I earn close to 9% per year on just holding stable coins in my crypto wallet.
Now, what are the different, it seems like Elon Musk has been talking about different ones, and how Tesla's hooked up and linked with some of them. And, there's these
Dogecoin.
So are these just different companies? There's Litecoin, Neo.
I describe them as networks because they're still trying to be decentralized, where they're just open source code, right, that anyone can download and run and start contributing to the network. So much like there are miners finding, running hardware to find blocks to add to the Bitcoin blockchain. The same is true for Litecoin. The same is true for Dogecoin. The same is true for Monero. The same is true for Ethereum, etc. Now, the difference is the characteristics of the network, right? So Dogecoin, has much fewer miners. It has unlimited supply right now. So there's no planned cap supply for Dogecoin. I think every day there are about 14 million Dogecoin being mined, and that'll continue indefinitely. And so, what you have to ask when you're thinking about, which cryptos to buy is what network you want to kind of be a part of. And some of the reasons I think, Bitcoin really stands out in this regard is, it has the most hashing power, right? The largest network effect. I think in crypto now, because we are talking about networks, we're talking about investing in networks. The most important thing is network effect, right? Because the larger the network effect, the more users there are on the Bitcoin network, the more businesses accept Bitcoin, the more you can do with Bitcoin, right? The more people you can transact it with, the more goods and services you can buy, the more confidence you can have in it as a store of value. So it all comes down to network effect. So you need to ask yourself which crypto networks are going to be the most resilient, which ones are the strongest, and which have the best potential to build strong network effects.
Okay. Now, is there a difference between a coin and a token?
Not really. I think it kind of splits hairs. I don't know if there's like an official definition, maybe I'm missing, but generally those terms are used interchangeably.
Okay. I was just curious because you hear some people talk about these tokens, and
You
then
hear some people say tokens
and coins like that. So, I think what we're getting out of this is that there's a lot of variables when you want to learn about cryptocurrencies and blockchain. So it's not like I can just go out and wing it. There's just a lot of different nuances about the different networks and which one, because now there's probably 10 or more different types of coins or networks. Thousands. Okay. So I think the end goal of what we want to talk about is, what you're doing as far as helping people understand these things. You have a website. It's called Road to Babylon. Tell us a little bit about your website. Sure. And what you guys are doing.
First off, I called it, a lot of people ask me, like, why the heck is it called Road to Babylon? I named it after a book that was really influential for me called The Richest Man in Babylon, which is just an excellent kind of personal finance book. So that was a lot of my inspiration for kind of how I teach about this stuff from an investment perspective. Mm-hmm. And yeah, I think you're absolutely right. This is a really complex industry. It's legitimate. Everyone gets caught up in the market and the hype and the ups and downs. What I try to impress on people is that if you pull back the curtain, there's a lot of value going on and there's a lot of interesting stuff going on. It's moving very quickly. And I think you're also right that most people jump in and don't really know what they're doing. In fact, 95% of people fall into that category, that they're investing in stuff. In fact, they've never used it. They don't know a third of, what we just talked about in terms of how it works. And in my opinion, that's a recipe for disaster. Because I think anytime you invest in something that you don't understand, it's a recipe for disaster. If you look at any serious investor, all of the best investors in the world, the one thing they'll all tell you is they don't invest in things that they don't understand, right? They'll never do it.
Yep.
So I don't want people to be, I think it's an incredibly promising space. I think it's a massive investment opportunity, regardless of what type of investor you are. So if you are more aggressive, it's great. If you're more conservative, if you like to focus on cash flow, it actually has a lot to offer you there. If you just care about it from a diversification perspective, it has a lot to offer you there. So what I'm endeavoring to do is, just help people navigate all of those decisions, right? By informing them, right? And I'm not going to tell you, do this, do that, because I'm not a financial advisor and I'm not a fiduciary. But hopefully I can give you a great idea of how you think about this stuff, how you want to structure your investment strategy and framework in crypto, and what are all the options and what you can do and all of this stuff. So the best way I decided to do this was to just build a course. And so this is something I've been working on for several months, almost a year. What I think is a comprehensive tool, kind of investor's toolkit course for crypto. It's over 6 hours of content. It may get longer as well. And it'll be coming out in the next couple of months. So if you're interested in that, you can go over to the website that Mike, you mentioned, and there's a section there that says course. So you can click on that, and then you'll be able to sign up for early updates when I do release it in the next couple of months. And I think that'll be a great resource for people that are interested. In addition to that, I have a lot of free resources on my website, including a newsletter, which I do weekly, which is just, kind of my thoughts on what's going on in the market. And I mix in some market analysis. I mix in some fundamental stuff, some, news, and it's really interesting. It's a lot of fun. So I encourage people to check it out if you're interested.
And you can also do one-on-one consultations if.
Yeah, for people that think they're ready to get into it now, or maybe they're already in and they want to get a better idea of a plan or a strategy, I offer one-on-one consultations. Those options are also on my website under services, and I like to start out, with a short consultation, so a free consultation, just to get to know you and see, if I can actually help and add value before I charge you or anything, and then we can move forward, or I can just answer some questions. Always happy to do that.
Yeah, perfect. And for everybody, it's roadtobabylon.org
Yep.
instead of .com. So make sure you have the .org. And once you're on the website, just like Shahar was saying, at least sign up for his newsletters. It's very easy to do, and I mean, this has been amazing. It's something that I listen to every day. Everyone's talking about this stuff.
Yeah.
But it's kind of like us back in the 80s, with the whole internet thing. And I'm like, going,
I think it's a lot like that.
It's to us, it was just like this. What are you talking about? I can go online and do this, and so it's a breakthrough. And for us, some of us older people, it's like going, how can this work? Just because we don't understand it, right? And things that you don't understand, you're going to have some type of doubt. But that's why people with your services are so important. It's that's how it gets out there. To make guys like me a little less scared in it. Because it's like I've always just real estate, stocks, bonds, mutual funds, and now there's this whole new thing that just is blowing our minds. So I really appreciate what you're doing. I appreciate that you're giving back and allowing people to go on your website and learn. I think that is it's just phenomenal talking about this stuff. I still don't understand it that much, so I may have to sign up for your newsletters also, just to make sure. But Shahar, I appreciate you coming on and taking a few minutes of time just to discuss this.
Absolutely. I feel like we could have kept talking for another couple hours, but
well, maybe we'll have to do a second episode, one of these days. Once you get your courses, once things get going, we'll do a part 2 of this, because I think there's just a lot of stuff out there.
So much to talk about. We scratched the surface, but I think we covered, the really important stuff, frankly, about how does it actually work. And the questions you asked are, I think, the right place to start for anyone, right? Really get your head around what's actually going on. What's the point? Why might it have value?
Yep, absolutely. So, Shahar, I appreciate it. Hey, everybody, roadtobabylon.org. And thank you. Take care.
Thanks. You too.